Everybody. Hello from London, but I know we have people joining us from all around the world. So good morning, good afternoon, or good evening, wherever you are joining us from. And welcome to today's webinar, which is all about better targeting, better delivery, how to revolutionize government-to-person payments. I'm Siobhan Bonita. I'm a former UK civil servant. I'm delighted to be chairing this webinar on behalf of Global Government Forum, the publishing house that serves civil servants all around the world, and with our knowledge partner today, which is MasterCard. Now, in terms of today's topic, for many governments around the world, changing how they make payments to citizens is a central consideration of their overall transformation strategies. And improving government-to-person payments has many advantages. So it can improve transparency and accountability of government spending, it can prevent fraud and misuse of systems, and it can lead to more efficient and targeted payments. Today, we're going to hear from a panel of fantastic experts about all of the ways that governments are already modernising their systems, leading to increased efficiency and greater financial inclusion in many areas. And our expert panel will discuss all of those issues, and I'm going to introduce all of our speakers in a moment. But this is just to say that before I invite our speakers to give their opening remarks, there will also be an opportunity for you, once they've spoken, to put your questions to the panel. So please do use this opportunity to put whatever questions you have to our great speakers. And you can do that using, there should be somewhere on your device, a Q&A function. So at any point from now on, you can use that Q&A function to send in your questions, and we'll get through as many of those as we can before the end of the webinar today. So in terms of our panel today, first we will hear from Minita Varghese, who is a Programme Officer at the World Bank, focused on digitising government-to-person payments for financial inclusion, women's economic empowerment, and improving efficiency. Minita has spent the past few years working on a combination of policy and research on digital payments and financial inclusion across several countries, including Bangladesh, Ethiopia, Rwanda, and Liberia. Then we will hear from Walt Henderson, who worked for the US Treasury for over 30 years in a variety of capacities, including roles in federal government revenue collection and disbursement activities. A highlight of Walt's career included the management of the Go Direct campaign, which resulted in the conversion of millions of federal benefit payments from paper check to electronic payments, and the successful Direct Express prepaid debit card program, which still to this day allows millions of unbanked recipients to receive benefit payments securely via a prepaid debit MasterCard. Then we'll hear from Simon Willis, who is Vice President of Public Sector of our knowledge partner, MasterCard, where he manages government partnerships globally, as well as a number of related innovation projects. Simon was formerly Global Head of Public Sector Innovation at Cisco. He's also worked at a number of GovTech startups and twice ran voluntary sector organisations in the UK. And for the first half of Simon's career, he was working for the UK government on digital transformation and social security reform at DWP and on financial crime in the Treasury. And then last, but by no means least, we will hear from Aniket Doiga, who is CEO and co-founder of Darshak Empowerment Solutions, which is a social impact organisation working on easing access to welfare. Darshak uses a mobile app and a field force of more than 35,000 trained women agents to help citizens discover, apply for, and benefit from government and private benefit schemes. They've helped more than 4 million families and micro businesses to get over $1 billion of benefits. And by 2030, they hope to reach over 100 million citizens with social security and financial inclusion services. So I'm sure you'll agree with me. We have a really stellar panel there. As I say, please do take this opportunity to put your questions to our panel using that Q&A function. But without further ado, Minita, I'm going to come over to you and invite you to give some opening remarks.
Thanks, Siobhan, and hello, everyone. Thank you for having me here. If we can go to the first slide. Now, we all know people receive money from the government for a variety of reasons. They could be payments for wages, social assistance, pensions, or sectoral subsidy payments. And sending these payments directly into a bank and mobile money account can lead to several positive outcomes, which Siobhan also mentioned at the start. For recipients, digital payments not only enables them to reach people more quickly and safely, but can also create a pathway to financial inclusion and women's economic empowerment. For the government, it reduces leakage in the corruption that often results from having to distribute cash and ensures timely payments. And because G2P payment recipients often form quite a sizable proportion of the population in many countries, it can also catalyze an increase in access points and support market size expansion. Now, digital payments enabling quick response during a crisis became especially real during the COVID pandemic. If we can go to the next slide, please. And what you see here is data based on research looking at 85 countries, where those that use digital databases and data sharing platforms managed to reach over 3 times more beneficiaries than those countries that had to collect new data from scratch when COVID hit. We can go to the next slide. And a modern G2P architecture framework, which I'm going to talk about, can help bring to reality those positive outcomes from digitizing government to person payments, which we just shared. The framework comprises of both building blocks and design principles that highlight the need to design for recipients and keep them at the center. And this framework can be structured across 3 main pillars: infrastructure, product and market design, inclusion, and empowerment. If we can go to the next slide, where we'll first look at infrastructure. Now, as you have very likely experienced in your work, having siloed platforms and systems can often cause errors, duplicates, and having multiple recipients receiving payments from multiple programs, which maybe they're not eligible for, can cause leakages, challenges with sharing data or migrating data, all of which can be quite suboptimal. And having multiple G2P programs or payment streams that can make use of shared infrastructure like the ID system or your central treasury and the national payment system, for example, that support different steps along that value chain of delivering payments can actually be quite key to increasing efficiency from an implementation perspective, as well as realizing some of those long-term development outcomes. We look at the example of Turkey, which has an integrated social registry that's used by most social protection programs in the country and is linked to 28 databases along with their ID system. Now, while it significantly improved efficiency of program implementation, it also made the lives of beneficiaries so much more easier. Those applying for a program just need their ID, based on which relevant information can be checked to confirm eligibility. And this decreased documents from what used to be around 17 to just one. You can imagine the time taken to apply, going back and forth to put together that package of 17 documents used to take days, reduced to just a couple of minutes, and the time to deliver payments from what used to take weeks to just now a couple of days. Moving to the next slide, where you will see the next pillar on product and market design, where it will be important to think about building blocks such as whether banks and non-bankers can participate. Um, is there an adequate network of access points and a payment acceptance network where beneficiaries are located? And finally, what is the type of account or payment instrument being used? With some of those examples of building blocks in mind, some of the key design principles you'll see in this next slide is to consider using a fully functional transaction account so that your recipients of government payments can actually use them beyond cashing out. And so that digitization of such payments can be that gateway to using other products and financial services as well. We see from the latest Findex data, which is a global data collection effort on financial inclusion, that 865 million people actually opened their first account to receive money from the government, among which over half were actually also women. Clawback clauses is the next design principles to think about. This is often used by a lot of social assistance programs in particular to ensure finality of payment. And essentially what this means is if funds are not withdrawn within a certain time frame, they will go back to the program. And when you're thinking about digital payments, this aspect of clawback clauses goes against the goal of financial inclusion because now recipients are expected to cash out and discourages them using those accounts. Moving on to payment experience. An important principle here is for recipients to be able to choose a payment service provider. If we can go back to the previous slide, please. And this is so that they can choose a provider that's most convenient to them. We see in the example of Zambia, where a program, social assistance program, allowed beneficiaries to choose from a mix of 6 payment service providers. And the reality was the majority chose something that was closest to their home. And as a result, you have travel time reducing from what used to take 6 to just 2 hours. Cost of travel came down. And because they were able to pick a provider that was most convenient for them, they ended up using their accounts for more than just cashing out. And this dropped transaction fees, invariably reducing cost to the program, which was otherwise covering those cash out fees. And finally, ensuring that your payment service providers have a sustainable business case for participating will also be key to ensuring convenience, helping ensure access and usage to formal financial services, and overall financial market development. Now, finally, in the next slide, um, we will see that this whole concept of this architecture should consider the barriers and needs of particular populations, especially women, for example, so that everyone can equally benefit, safely and confidently use their payments. Now, issues that recipients face can only be addressed if you're getting timely feedback from them on what's not working, or what's working well. And we'll see in the next slide, one of the important principles to consider is ensuring that systems capture data that's disaggregated by sex or other relevant indicators to then inform policy. We also see evidence that directing payments to women can increase economic empowerment across a range of dimensions. In Niger, increased convenience with women recipients who were being paid through mobile money, improvements in diet diversity resulting in increased nutrition and diet for children. And in Jordan, we see increased mobility among women who were paid into a bank or mobile money account, where the majority, 69 to 70%, went and withdrew money themselves, compared to 47% that actually had to take someone else to receive their payments. And this was the group that was paid through prepaid cards. So it will be, and because G2P payment recipients, like we saw from the Findex data, are often navigating the formal financial sector for the very first time, there will be limitations in awareness in digital financial literacy that can cause a range of difficulties. So it will be important to ensure that recipients are well informed, covered by adequate data protection measures, and have clear access to grievance redressal mechanisms so that they can build trust in the system and that everyone, including vulnerable, marginalized groups, can safely and confidently access and use those payments. Now, while all of this and what we just walked through are characteristics of an ideal architecture, the reality is that different countries will have their own version of an ideal, which will be based on the different enabling conditions they have in their context. They might have a different starting point or different requirements that they have to navigate. So, with that in mind, I hope this framework and some of these examples shared can inform and serve as an inspiration in your own journeys towards implementing and scaling up digital payments. Thank you.
Manita, thank you so much. That was a fantastic opening presentation, because I think you've really set the scene there, and there'll be lots of issues that I think we'll pick up and that the audience will want to come back to in the questions. But some of the things that really struck me, it's good to hear, as you say, the research from the World Bank about what the principles of a good design for this for direct payment systems look like, needing to get the infrastructure right, and actually how much it benefited countries that had some of that infrastructure in place already and had some of the data in place when it came to the crisis like COVID, how much that benefited who they were able to reach to. But also other things that you mentioned, the benefits of having an ID system in place, a digital ID system in place, how much easier that makes people to kind of streamline the whole system, thinking about who can access, who takes part, banks, non-banks as well, how payments can be gateways to other services as well, and then really focusing in the heart of the design on what the user wants, what will make this easy for the recipients, and giving them choice and convenience as well. And then also, as you say, if you empower women in particular, that leads to all sorts of benefits, wider benefits on the family and the community. The other issues we might come back to, I think, around trust and financial literacy, I'm sure we will come back to those in the conversation. Thank you so much, Manita. Great way to start. Walt, I'm coming over to you.
Great. Good morning and good afternoon, depending on where you are. I'm happy to be here today to share some knowledge with you from my 30-plus year career with the U.S. Treasury. And I have over 20 years experience managing various electronic payment initiatives, including the electronic payment of federal benefits such as Social Security and supplemental security income payments for the elderly and disabled. I want to take an approach where I sort of tell two stories today that I think illustrate where we were, where the US was 15 years ago, and where they are now with regards to delivering payments to citizens. And it really illustrates how the US reacts when delivering federal payments in the time of disaster or national emergency. Hurricane Katrina impacted the Gulf Coast of the United States in August of 2005, specifically, and the dates are important, August 29th to 31st. Most impacted was the city of New Orleans, Louisiana, not just by the storm, but by the breaching of the levees that protected the city from flooding. The timing of the storm related to the delivery of federal benefit payments was also a disaster. Most Social Security and supplemental security income payments are paid on the first and third of the month. And in 2005, nearly 1 million beneficiaries who lived along the Gulf Coast were expecting payments. At this point in time, nationally, just over 2/3 of the payments were paid electronically. And for SSI, supplemental security payments, where it's estimated, many of the unbanked are, and these payments go to the most vulnerable, almost half of those payments were still paid by paper check. And there were anecdotal reports of benefit recipients not heeding the warnings to evacuate for fear of missing mail delivery of the payments on the first of the month. Again, back to the timing of when the storm was occurring. For many who did evacuate to locations across the southeastern United States, those relying on benefit payments as their sole source of income were left with few options. Check delivery issues lingered into subsequent months as many recipients permanently relocated, and some addresses, because of the damage from the storm, simply no longer existed and weren't there, for mail delivery. The Social Security Administration, the U.S. Treasury, and the U.S. Postal Service did a tremendous job of repositioning checks for distribution and issuing emergency and replacement checks to those impacted. However, this event illustrated to government officials and lawmakers that there were major weaknesses that needed to be addressed in order to deliver critical emergency and lifeline payments quickly and safely. Prior to this event, the U.S. Treasury and other federal agencies had taken a soft approach to encouraging the use of direct deposit for federal benefit payments. However, two key elements were not addressed. The first being an overall message highlighting the importance of direct deposit or electronic payment beyond convenience, mainly for reasons of safety and security, and the availability of an account that allowed for electronic payment for the unbanked, underserved population who were shut out of the banking system and primarily relied on checks and cash. In 2008, the U.S. Treasury took advantage of the quickly expanding prepaid card market and offered the Direct Express Prepaid MasterCard. Specifically designed for federal benefit recipients, the Direct Express card allowed recipients to open the account when applying for benefits and receive payments electronically, safely and securely, with few, if any, fees. The Direct Express card operates very similarly to a bank account, with the same fraud and consumer protections available to bank accounts and can be used anywhere MasterCard is accepted. This was the final piece of the all-electronic puzzle, so to speak, that allowed the US Treasury to take a more aggressive approach by mandating the electronic payment of federal benefit payments by 2013. Despite the mandate, the Direct Express card was an instant success. It's rapidly growing to nearly 4 million cardholders. And most importantly, nearly half of the Direct Express cardholders were SSI recipients, that group of benefit recipients that I mentioned during the storm, only half were receiving payments electronically. And again, and those are the most vulnerable and most likely to be unbanked and underserved. Today, virtually all of the 67 million Social Security payments are paid electronically, and just about the same amount of the nearly 8 million supplemental security income payments are paid electronically, with a large percentage of those paid on the Direct Express card. So let's jump forward 15 years. Not that we want to revisit it, but we'll talk about the 2020 pandemic. In the spring of 2020, in response to the COVID pandemic, the US Congress passed legislation to address the economic impact of the pandemic. And one element of the legislation provided for direct payment of what were called economic impact payments to over 163 million Americans with a value of $390 billion. So this is a much larger payment event we're talking about versus what I spoke to early around Hurricane Katrina. And these payments were dispersed in 3 rounds between March 2020 and April 2021. 15 years later, the US Treasury was in a much better position for this massive undertaking. All federal benefit recipients, including Social Security recipients, were eligible for these relief payments. Making payment was as easy as using the existing direct deposit information to automatically deliver their relief payment to the same account in the same manner that they received their monthly payment. Direct Express cardholders, most of whom were eligible, simply had the payment loaded onto their Direct Express card. Nearly 99% of recipients already receiving benefit payments received the relief payments electronically to their existing account with little or no effort. Likewise, taxpayers who had previously filed a tax return and had received a tax refund electronically had the relief payment delivered to the same account in the same manner. Groups of recipients for whom there was no banking information, and in some instances, the Treasury mailed a prepaid card containing the payment to them, another electronic option. And then a website was available, so recipients who needed to update or provide direct deposit information to receive their relief payment, they were able to access the website and update their information. By the 3rd round of the relief payments in 2021, a total of 138 million households received payment by direct deposit, with 85% of the dollars paid electronically, largely riding the rails of electronic payment information that already existed in the government's payment databases. The first round of payments began 2 weeks following the president signing the legislation. The legislation was adjusted to provide additional payments, so the second round began in just 1 week after signature. And then the legislation was modified again to provide additional payments. And the 3rd round began in just 1 day following approval of the legislation. Still, 15% of the nearly $400 billion in relief aid was paid by paper check. And for some, the delivery was too slow. The payments landscape is constantly evolving, and citizens are best served when their government takes advantage of the latest technology and trends. Despite this, the 2020 and 2021 round of economic impact payments were a tremendous success and demonstrated the value of the government heeding the warnings of 15 years earlier. I look forward to hearing the other presentations this morning and participating later in the discussion.
Well, thank you so much. It's fantastic to have you here with your wealth of experience, and really interesting to get those 2 concrete examples. Everything that you said there about the lessons learned from Hurricane Katrina, so useful then when COVID hit. Really good to hear about how you moved from that kind of softer approach to actually mandating people based on that experience of Hurricane Katrina and all the benefits that it brought to people. And you mentioned there the Direct Express prepaid MasterCard system that you now use, that millions of people are using across America. And then, as you said, the fact, echoing, I think, what Manita said, in particular, reaching out to the most vulnerable in society, the importance of having that foundation in place and having the data in place so that you can get the majority of the payments out and then really focus on reaching the even harder to reach kind of citizens and population as well. Well, there's lots of things to unpick in there, and I know we will come back to those in our conversation. Thank you so much. Simon, you've been mentioned a lot now, MasterCard, in the presentation, so I'm coming over to hear it from the horse's mouth.
Thanks very much, Siobhan, and hello, everybody. It's really a pleasure to be here. I've been fascinated with this area ever since I started my government career at the Department for Work and Pensions, looking at digitizing certain processes within DWP. That was 30 years ago, and progress has been slower than I guess we imagined it would be. And I'm not sure of all the reasons for that. I think some of what Manita was explaining about the complexity of different sources of data and permissioning and so on across benefit systems must be part of the reason. But I think also it's because it's very hard to drive a large, complex process of transformation if the main arguments are framed in terms of cost savings, or even cost savings plus fraud reduction. I mean, these are good and powerful arguments. And actually, the question I wanted to ask Walt was, I mean, we always said about Direct Express that every paper to digital conversion saved $1, which means the total savings must have run into the hundreds of millions in the end. I wondered, I'll let him answer later, whether that figure was ever actually calculated. It would be very interesting to know the kind of 14-year life of the program, however long it's been going now. But I think what emerged during COVID was an interesting set of new phenomena that added to the cost savings argument and the fraud reduction argument. And of course, the very powerful arguments around inclusion and empowerment that Manita expressed so clearly, and the gradual emergence of something. And I think it was Walt actually who said, I mean, at MasterCard we tend to think of these tools as cards. We think of them as virtual cards or prepaid cards, or we have a little bit of a slightly card-obsessed view on the world. Whereas by the time a card is virtualized, it's not really a card at all. It's a bank account. It's a limited services bank account. And that is why it's become increasingly clear that it's such a powerful tool for financial inclusion and empowerment, because you're putting this multifaceted tool into the hands of people who, and we still have, I think, just shy of a quarter of the world's population is unbanked. So we're talking about a huge potential issue still to this day. Even in countries like the UK, the US, we still have millions of people unbanked. So it's and these are often the absolutely key people of the utmost concern for welfare and social security programs and other interventions of support. So these factors are all powerful, but as I hinted at, I think something else is emerging looking forward, which is quite interesting and quite exciting, which is that we started to see during COVID a couple of different phenomena. One was jurisdictions, often, by the way, at the city or state level rather than the federal or national level, because you can be a little more agile. At the city level. We saw a lot of jurisdictions looking at targeted support payments. So not only targeted at very particular groups, of geographical need or other social factors that define the group they had great concerns about during COVID, but also what digitization opens up is the possibility also of targeting the uses of the payments, so that you can limit, for example, some jurisdictions, Northern Ireland and Jersey, over here, for example, used it to geographically limit payment uses so that it would benefit the local economies that they were pushing the money into. And that was a key political concern. But you also see, and I think possibly one of the most interesting programs we ran there that we've learned from and now is being replicated in various ways in lots of different places, was the Los Angeles benefit program done under our City Possible program, which was the Angelinos card, which again is a kind of mini virtual bank account, which allowed disbursements to groups of Los Angelinos. I think they paid out something like about $50 million. So it's not a huge program. But one of the interesting things that you can do with a combination of analyzing anonymized aggregated use of the cards, and then we build around that an analysis of the anonymized aggregated payment flows that are happening in those communities. So we have a kind of dynamic three-dimensional view of economic activity all the time, which we've tended not to use with governments, because governments haven't asked for it and they don't know that we have it. But what you saw in Los Angeles was them saying, what exactly is the money being used for, and are we targeting it in the right way? And if you've got limited resources, which every single benefits program in the world has limited resources or presents resourcing challenges, the potential of being able to say, let's just send it to those places where it's going to have the impact we want it to have, or that our political constituency wants that benefit intervention, that payment intervention to have. This is really interesting and really potentially powerful. And you start to open up the possibility of being able to recalibrate. Partly because you've got digital systems in place, it is easy to do that, to recalibrate, to retarget, to repurpose the payments so that you get more and more of the social impact that you're looking for. I mean, one of the fascinating things that came out of the Los Angelinos anonymized analytics was that people spend their payments, their disbursements, in exactly the way you'd most hoped that they would be spending them. So it concerns that some critics might have had that people would waste the money on fun stuff was rubbish. It was used for food, it was used for discount children's clothing, it was used for travel to work, and we could see that very, very clearly. There's very little of the money went astray because the need was so pressing, which I think is a very powerful piece of information, only made possible by having a fully digitized system in place to get to that full kind of flexible, real-time intelligence about what's happening in a disbursement system. I think if you put the combination of that, virtual limited bank account and the inclusion and empowerment effects of that, together with these kinds of analytics, both of the spend from the disbursement and the spend around it, so that we could see, for example, how economic activity in particular communities, sub-communities, was being affected by the interventions. And that again is politically, gold for people who are trying to spend that money. So that is the main point I wanted to make. If we're worried about how slowly it has been taken up and are daunted by the huge complexity of driving this kind of program, maybe looking to some of the benefits, not only the administrative savings, which are huge, but the benefit program savings from being able to have more targeted interventions and the political advantages of being able to show the primary and secondary economic effects, microeconomic effects of the disbursement interventions, then I think you have something that is politically irresistible.
Yeah.
And you know, it kind of starts to bring into focus the possibility of something I certainly was talking about 30 years ago in government, which was evidence-based policymaking. So we've been talking about this for a long time. Whereas most governments have indulged, as we know, in policy-based evidence making.
Yeah.
So you know, this opens up the possibility of actually doing that for real and doing it in close to real time and starting to have a much more agile system of disbursements. So that's what I wanted to do with you.
Thanks, Simon. Again, really interesting, bringing in some different points, but also echoing, I think, what Walt ended by saying there's been good progress, but there's still improvement that could be made. And I think you're saying there as well that you found that development to be quite slow, actually thinking about how far, how long ago you were already talking about these things in government, but also really important, I think you're bringing in this issue of data and the use of data that you get from these systems to then drive and support future policy making. And also I think the things that you were saying about looking at how money is being spent is going to link to some of the questions that are already coming in about how can you measure the impact of some of the government person payments. So I think that issue of data really important, and bringing in, as well as you said, a different kind of targeting. So whether it's as you say, still targeting the kind of hardest to reach members of our societies, but also, as you say, maybe potentially using money in a particular way once they've been given their payments. So lots and lots for our audience, and great thank you to the audience for sending in such great questions already. We will be getting to those soon, but now I'm going to ask Aniket. I know there's loads going on in India on digital payments, Aniket, so I'm really interested to hear what you are going to say.
Thank you. And it was great to hear everyone. I think a lot of what we're doing is kind of shared by everyone, and it is so I think government social security or government benefits it's very clear is a global problem. I wanted to share this statistic that the OECD countries, if you could go to the next slide, please. The OECD countries spend about 28.5% on social security. India spends about 10%. And this is really the number largely for most global South countries. And mostly there is another challenge, and again, I'm talking more from India's context. There are about 20,000 government programs, because government programs, a large part of the world are political programs, close to elections. How can you create more programs? How can you create more government documents? And I think largely what was earlier shared in the conversation as well, I think the challenge that the low-income families face really is access in terms of literacy, access in terms of identity, and access in terms of last mile service. Just to give you an example, we at Haqdarshak essentially get people access to this information and last mile delivery through a network of women agents. And last year we did about more than 500,000 government health insurance schemes. Programs, right? Like that's one of the largest programs in the government. And we do over 20 to 25% randomized calling to these families to check whether they get the benefits, was the service good. And most of them said, yes, we got the benefit. And we asked them, what is health insurance? They said, we don't know. We have no clue what health insurance is. We don't know it's a cashless program or a cash program. So I think the literacy is not just the traditional digital literacy or financial literacy, it's also government program literacy that is missing. And that's where, on one of the earlier points that was mentioned, that there is a lack of trust, not only in terms of government officials or kind of tech IT, but also in terms of the actual customer, in terms of getting this benefit and using it. If you could go to the next slide. So I think, like you already mentioned, that India is doing a lot of work on the digital public infrastructure, and some of the work that we are also trying to do here is on building on the infrastructure that the government has already made, but also looking at some digital goods that we are trying to create. So there are three broad things here that we're trying to do. One, using the current DigiLocker and document storing, we're trying to create like a document registry, because our learning has been that getting document access is the largest problem for the citizens, small businesses, farmers, women, in terms of getting their identity done. We are also trying to create a social security score. So mostly, like, earlier again, it was mentioned that quarter of the population of the world is unbanked. They're also, but more than half of the population or even more doesn't have any kind of credit score. So if you do not have a credit score, it's very difficult to get into mainstream financial inclusion, which is actually lending. So what we are trying to do through data and through our engine, we have an AI-based engine which basically determines what is your eligibility from this universe of government programs, which are the 2030 you get. So creating the social security score and getting people into the habit of getting not only government benefits, but spending on government benefits, which means paying your health insurance premium, paying that nominal pension fund amount, ensuring you're paying your EMI on time, which you're getting from government in terms of subsidy or loan. That can create a record or kind of a score, which we then intend to make it the base layer for the credit score. Because ultimately you want this entire population and this entire network to get access to credit. And like I said in the last, while it's a lot of focus on health schemes, financial inclusion, and digital literacy, in terms of just building that layer. And India, like I said, a lot of countries like India, it's true that India is an assisted tech country. Anybody who is building right as a digital solution for the end customer is going to burn through a lot of capital. What we need to really build for agents, community agents who can be champions and deliver a lot of these services. Because the reality is that anything and everything that you do in a very vast population, or a population which has literacy or access to literacy in a very different way, there is an agent model that we pushed for. If you could go to the next slide, we are basically sharing a digital DPG framework here just for everyone's reference, that a difference between a digital public good access and with a digital public good is largely again the difference is in the challenge and the ease. I think earlier Vinith also shared examples of how in different countries, by making a single ID, the documentation process has gone down from 70 to 1. And I think a similar approach is what we are here looking at, that where by ensuring that a single ID and IVR system is created, then the government benefits, and building it on the identity layer that the government of India has built, we've been able to reduce a lot of time and effort for the citizens to get access to government programs. You could go to the next slide. I think long-term digital public infrastructure and digital public goods benefits is largely, interoperability, because I think we don't talk about it enough. I think again, in a very federal large country, the challenge becomes different departments and different states talking to each other. And having a public infrastructure model really allows, whether it's a health department, education, because if you're looking at the last mile holistic outcomes, right, a lot of government departments and even financial institutions just focus on outputs. But if you really want to look at long-term outcomes, then it has to be looked at from a holistic way of different departments and different programs, education, healthcare, talking to each other. Quickly on the last part, couple of last part in terms of what we are doing at Hagdarshak, if you could go to the next slide. We've kind of, we are on the bandwagon of cards as well. Whereas we really believe that I think there is a need for a social security card. So we call it Yojana card. Yojana in Hindi is really a government program. So it's essentially a QR code based card. It can be, of course, digital as well. But again, there's a demand for physical cards. It's built on the government platform on digital stack and really is interoperable. It's multi-purpose. If you could go to the next slide, in terms of ensuring that through this code we can get all the government social security benefits as a dashboard to the citizen, and then we can also apply. And we are linking it to the bank and government departments. Probably go to the next few slides in terms of the value proposition that we are working for the banks in terms of all these government benefits that can increase and document readiness for government credit. And we are also, of course, working now in the launch of our card with MasterCard, apart from doing the government integration. So if you could go to the next slides and the next one, sorry. The work that we are doing with MasterCard, we are essentially building it on the platform, payment platform, and it's the bank model that we will have in terms of the card. It will allow that it's a prepaid card which citizens can use and kind of get all their financial inclusion benefits. Again, the idea is that in India, again, to give you a statistic, India has 500 million Jan Dhan accounts, which are free, zero balance accounts, but only 20% of them are really active. 80% of them are dormant. So I think a lot of the financial, I mean, a lot of social security work delivery can be kind of worked in terms of getting financial inclusion and getting some of these accounts active and getting the payments in. And like I mentioned earlier, using the social security score model, we can really make the base for getting these families onto the credit linkage and financial inclusion. Yeah, thank you.
Aniket, thank you so much. I mean, as you say, there is so much going on in India in terms of getting the foundation in place, having that kind of digital ID. And I think digital ID has been a recurring theme in terms of how it helps to streamline the processes. But really interesting to hear how you've come in and kind of built on that. And also you bring in that the next kind of step. I think it's not just about payments out. It's about then making sure that people use that money, spend that money, build up the kind of footprint that they need to have the credit scores and the credit history that they need then to be able to get credit, which is important, not just, I imagine, for individuals, but for very micro businesses, small businesses, which leads to that bigger empowerment point I think that our other speakers have talked about. And really good to see the Johanna, is it the Johanna card there, that example of that as well. We've got so much questions in, so thank you, Aniket, for that, for bringing in that perspective. We've had some great use case examples here. We do have questions coming in, but I just wanted to pick up on a couple of things, because Simon, I noted down that you wanted to ask Walt, because I think this links to one of our questions as well. You wanted to ask Walt whether any evaluation had been done on the kind of savings that moving to this digital system has cost. And I know you said it's not maybe the most powerful argument, but from a government perspective, it's a good argument, isn't it, if you can save money delivering effective public services. So, Walt, did you want to respond to Simon's question on that?
Sure. There were obviously significant savings converting paper checks to direct deposit. And yes, a lot of our messaging early on centered around, well, it costs $1 for a paper check, 10 cents for an electronic payment. But towards the end of my time at Treasury, I think as the accountants started to look at more of the overhead, I think they found that checks cost far more than $1. I don't want to quote anything because I don't know the latest figures, but that checks, and especially as the volume declined, the checks became even more expensive. And I imagine the few that Treasury are sending out now are quite expensive. Interestingly, during our campaign to push people to direct deposit and the Go Direct campaign, the feedback we heard from focus groups, individuals weren't interested in hearing messaging around the cost savings. It kind of fell on deaf ears because they think, oh, the government, they're just going to spend it somewhere else. So really in our messaging to get people to move, we focus more on the safety and security of an electronic payment versus the cost savings to the government.
Thanks, Walt. And I'll pick up on that safety issue because that's one of our questions as well that's come in. Thanks, Walt. And Manita, my final question before we go to the audience questions, also something that Simon was talking about. So he mentioned, obviously, the potential targeting of these schemes. I wondered how that, and obviously, Simon, you weren't saying that people had to use their money in a particular way. But Manita, is there a balance to be struck? Because you were saying you give as much choice as possible to recipients of the scheme. So how do you get the balance right between giving recipients choice, but also then potentially, as Simon was saying, it could be very desirable for governments to say they want to target the use of the payments?
Absolutely. So there is that balance in that when you give choice, you have benefits in terms of financial inclusion, them actually being able to use their account because they're now picking something that's most convenient to them. From the government's perspective, to ensure that they're using funds, and I believe this is the point that Simon was trying to make, using the funds in the way that you want them to use, I think the best way to go about that without, having some mechanism where you're monitoring what they're doing with their money is, again, data collection. Having strong monitoring mechanisms where you can have, quick, now with your IVR mechanisms, or rolling out quick feedback mechanisms to capture what are you using those funds for. And I believe Simon also made the point from, was it the Los Angeles example, where when they looked at the data, most people were actually using it for what it was intended for. So, there is, of course, that balance of, the government, of course, wants to ensure that the funds are used for the right purposes, but the right way to go about that, so you don't compromise on the financial inclusion goal, is to tap on some of those other data collection mechanisms to get feedback from citizens, and then, of course, determine policy going forward accordingly.
Thanks. Yeah, and I guess, this is the thing with digital services, isn't it? You can have that data, you can do that evaluation. You couldn't have that when you were in a paper system, so you wouldn't be able to have that kind of trail.
Exactly. You can have a quick sample that you go back and get feedback from.
Yeah.
So, yeah.
Okay, we're going to go over to the audience question. The first one's very easy. To Okera Duncan, yes, we will be sharing the slides, if that's okay with Manita and Aniket, so we can share those slides with our audience. I want to come to Sean's question first. So he said, thank you to all of you for the great presentations. And he said, as there are many payment service providers with excellent solutions, when moving towards solutions, in particular for vulnerable, so the banked, non-banked individuals, how do you suggest ensuring transparency on the selection of the supplier? So does this come into the procurement process or an assessment criteria? And I think Sean's concerns there are around the kind of safety. How do you know the safety then of the data and the safety of the system and security of the system? Part of that building trust, I think, with the users. So Aniket, obviously you're part of kind of an ecosystem, I think, of providers in this. What would you like to say in response to Sean's question?
Yeah, I think, largely, I think in terms of data security and platforms, most payment providers and choices are similar in that sense. I would say that I think largely, and I think the citizens really focus, what we have seen is on the features and the ease of getting the benefits. I think ease for citizens matters the most. If it's coming from an angle or, from a perspective of bureaucrats or people who are choosing the systems, then I think, of course, data privacy matters a lot. So I think what we have seen is that in India, we're also framing an account aggregator and a backend protocol, which ensures that citizen data privacy remains with the citizen. So I really believe we need to move to a place where actually data of the citizen belongs to the citizen. So every time you want consent, you need to have consent from them before using it. So the entire shift actually of data should move to the ownership of the citizen. Of course, I think for us, like I said, I think even as last mile kind of service providers, and when we talk to citizen groups, for them, mostly the choice of a payment provider comes down to ease and the way they can kind of use it in multiple ways, right? Like same payment solution in using when they get a government benefit, which was already shared. Like, can they make payments from it? Can they buy things from there? Can they use it for utilities, other things? So that becomes a more kind of important aspect from a customer lens.
And I guess, especially in a crisis, the speed with which the payments could be made was kind of one of the primary considerations. Walt, I want to come to you, though. I imagine the security of the systems and the security of the provider that you used was a key consideration as you moved onto the electronic and digital systems.
Exactly. For the Direct Express card, it was designed to be the same as an account at a financial institution. It's, even though it's a prepaid card, it still rides the banking rails, and it still has the same consumer protections and security that a person's bank account does. So it's essentially the same, and we wanted to capitalize on that and not have benefit recipients feel that a Direct Express card is something different. They're joining the mainstream because it's a banking product.
Yeah. Okay, thanks, Walt. Manita, on this, one thing that Sean mentioned was the longevity of the service provider. And you'd mentioned as well that one of the principles had to be that the scheme was sustainable, that it would be there in the long term to provide reassurance and trust. What do you think, in Sean's question, what were the other things that you would want governments to be looking at in terms of their choice of providers?
So I think some of the other points are because often, and Walt and Simon mentioned this as well, you're talking about people who are getting this service for the first time, whether it's a prepaid card, a bank account, ensuring that your provider can facilitate when it comes to account opening, can provide that touch point where they facilitate that account opening process, often in remote areas. If it's on the onus of the recipient to go figure it out, go open an account, then come back to the program, give that information, that can cause several friction points, right? The second thing is access points. There's no point digitizing if there's nowhere, if recipients still have to travel long distances to go and collect their payment and end up having to wait in wait in long lines to then collect those payments. So keeping in mind which provider has a sufficient access point network, and making then those decisions around where and how to digitize based on some of those data points, and willingness of the provider to facilitate that account opening process and those first steps into accessing the formal financial sector. The other aspect to consider is awareness and literacy, right? And sometimes the most powerful way to build awareness levels is to leverage those teachable moments and touch points. And because it's your payment service provider that they're also interfacing with to access payments, having agreements with them to provide specific messaging around what they can do with those accounts and payment products that they are offered with. So yeah, those are just some of the other aspects to keep in mind.
Links to what Aniket was saying about having champions out in the kind of remote areas to kind of do some of the education piece as well.
Exactly, relying
Simon,
on their agent network as well. So,
Simon, it felt right, given that this is all about excellent service providers, to give you the final say on this particular question.
It's a tricky question. It's partly about the arbitrary nature of different market sizes. I mean, you know, Aniket and Walt are both kind of blessed with the fact that they have huge domestic markets, which can sustain competitive PSP environment, and not just a competitive PSP environment, but one where you start to see PSPs emerging who specialize in and make it their job to understand government, which is a very, you know, particular piece of business to go into. And we've seen how slow GovTech is to emerge. I think even in the specialized PSP market, it's been slow and difficult to get enough competition going so that you could really run the kind of open, fair and transparent procurement which your questioner was hinting at. So I think it's really tricky, particularly for smaller countries. Even the UK doesn't have a very rich market of PSPs that really understand public sector. If you go down to smaller countries in Eastern Europe or Southeast Asia, I think that's a huge challenge because each system is different.
Yeah,
it's not just the language differences. There are a whole set of other, legal and regulatory variations which make it very difficult for people to provide cross-border solutions. So I think it's a tough one.
Well, on that note, that picks up.
Although Mastercard does lots of due diligence on. Right. So we're a good friend to those who want to know who is reliable and won't steal your data and that kind of thing.
Right. I mean, the point you just made there about kind of the differences across borders. So Adesola has asked, is it possible for uniform global payment in government business throughout the world if every country has their peculiarities? Simon, I'm going to come straight back to you, because are you saying that's part of the problem, that every country is going to require a different approach?
Yeah, I really think for the foreseeable future, the answer is no. Maybe somebody else has got, maybe you can standardize at certain levels in the stack. But, look, it's even complex in federal systems.
Yeah.
You know, you have different legal and data requirements in places like India, Australia, US. You know, even state to state, you've got complexities. So,
Yeah.
well, I'll let Walt talk to that, but or Aniket. But no, I think the answer is no. It's not within reach.
Manita, I'll come to you last on this one because you've got that kind of overview, I think, of several countries. But Aniket first, then Walt. Are you, like Simon was saying, is it difficult enough to do it within a country of your size and with the kind of federal structure than to worry then about getting consistency across countries? Aniket first.
Yeah, I think, like Simon said, I don't think we should even push for that, because I think the government infrastructure and the requirements in every state and country are very different. So the southern part of India, for example, is kind of a middle income country, whereas the central part of India, where 60% of the population lives, is still a lower income country. So the requirements, the basic requirements of, let's say, food and fertilizer support in social security or subsidized loans is much higher in the northern and central part compared to the southern part, which is now moving towards support on businesses, capital requirements, subsidized loans. So I think the requirement, infrastructure, the incentives will be so different, and this is just India. But I think so. I think and innovation will also come. A lot of innovation in this space is required, and I think innovation will come when we are being very localized, but using a central layer. So whether it's a payment provider, payment layer, ID layer, using an infrastructure which could be common or similar, but building on that as kind of very different solutions. So it can be tried, but yeah, I mean, as much as possible, we can try local. Is my thinking.
Thanks, Aniket. Walt, would you agree with that? Did you think at all beyond kind of the national scheme? Were you looking at all internationally?
Oh, definitely internationally. There's a significant number of US expats that are living in other countries collecting benefits. So, you know, they sometimes use their US account, or they open an account in their country of residence, and there's a mechanism for delivering the payment there. Interestingly, you know, I think a number of benefit recipients would use the Direct Express card because it's just easy to use a card in an international environment versus opening a separate account.
So actually that system itself is pretty global, that operates wherever you are.
Anywhere MasterCard's accepted. So
right. Yeah. So Manita, your thoughts on Adesola's question?
I fully agree with what Simon, Walt, and Aniket says. You can't have, you know, a cookie. It can't be the same thing across countries, because the reality is requirements change, the underlying enabling conditions, the infrastructure that's available changes, and what your ultimate citizens require also change depending on the context they live in. But some of those key principles and things to look out for can be common, and then you adapt your approach depending on the specific country context. Having said that, just want to second what Aniket was saying on still leveraging your underlying shared infrastructure when that's available within country. So regardless of the region or program, making use of some of those building blocks essentially, but your ultimate approach to how a particular program is implemented will vary depending on what's going to work in that particular context.
Yeah, thanks, Mita. Okay, the next question is from Caroline Downey, and Caroline asks, what are the performance metrics you recommend to measure the impact of these systems and to ensure the program is working efficiently and meeting the population's needs? Walt, I'll come to you first on this. How did you go about evaluating the success of the program? And obviously we've heard a lot about the importance of data. Was that something you were gathering from the rollout of the scheme?
I think the ultimate measure of success is the percentage of electronic payments. I mean, that was the US Treasury's goal, to convert all of those check payments. And I think when you have categories of payments such as Social Security, you know, above 99% direct deposit, I think that's the ultimate measure of success.
Yeah. Thanks, Walt. Simon, I'm going to come to you straight away on this. So Walt's measure was how many people are benefiting from this. But I think now you're saying as well, you can dig down into how they're using the payments and then feed that back into the policy making process?
Yeah, I think it's, I mean, and let me stress it's really early days on this, so this is really forward looking. But I think once governments realize how rich and how precise the analytics can be relatively easily made accessible, they will start to use that a lot more. Which measures they should use is something for governments themselves to decide. Is it global fairness? Is it empowerment of particular groups? Is it acceleration of particular economies or economic activities? Or as Aniket was saying, in some areas it's about survival, and other areas it's about accelerating small business growth. Which measures is something is a political decision. What I'm saying is that the tools now available, which most people are unaware of, are very powerful and very diverse.
Thanks, Simon. And Manita, do you agree with Simon there that the evaluation could be wider than kind of just who's using it, but also, as you say, the bigger consequences of the scheme's effectiveness?
Yes, so I think there are two parts to it. There's the data you can get from the system, which tells you what's working, what's not. For example, how many recipients are enrolled? Did it happen at the right time? Were funds transferred in time? And what Walt was saying, how many payments among those were made digitally? And then you want to pair that with feedback from recipients, right? To measure things like travel time. How much are they actually bearing in terms of costs to access and use those payments, and things like so. I think it's a combination of what you're getting from the system, and 100% that should be tapped into, but pairing that with what recipients are experiencing, because your system may not fully give you that picture, right? So yeah, it is a combination, and yeah.
Thanks. And Aniket, your thoughts? Do you have particular measurements in mind when you think about the success or not of your initiatives?
I think a lot what like all the other panelists have mentioned, I think very similar. But I think one metrics that we really focus on is treating the beneficiaries as customers. So I think this segment, nobody treats people as customers. They're treated as beneficiaries. So nobody talks about customer delight, trust, which we would talk about in the top 10 percentile. And I think the most important aspect, for example, when we partnered with MasterCard, is the trust factor, right? Like if anything happens, you have a partner where you could trust. And similarly with what happens with us also. So I think going back and measuring from just the fact of the service in terms of the benefit, how they're getting, in terms of are they happy with it? Because if I mean, again, from India's context, if you're designing programs for 1 billion people, who's asking the 1 billion people really, like, do you like the program? Were you happy with it? And it's just not about using it economically. Like I said, if you start treating them as customers, questioning them with customer delight, that's a concept which is in this segment, nobody is really looking at. We're trying that. And we're getting some very interesting insights in designing our programs, because people, like I said, are talking about, I need literacy on what insurance is. How can I create an insurance, pension, loan kind of an account where I can deposit on this? Or how can I use, I'm talking about the insights that we are using now is how can AI predict what scholarship a girl will require in 6 years in a rural village in India? So these kind of things, I think, can come also from a lot of this ground up customer-oriented approach analysis.
Yeah. That's really interesting what you say, Aniket, because I think we found in some of the things we've done in Global Government Forum that actually sometimes people's interaction with government can be quite a negative one, especially if it's in a moment of crisis, because already there's a lot going on, trauma in the wider context. And actually, if you're saying, if you can create these systems where people, especially if it's their first engagement with public services, have a very positive experience, that could lead to all sorts of better engagement with the government and public sector going forward. So really interesting there. I think we've got time to squeeze in one final question, but you might have to keep your answers to this quite brief. So this one has come from Jaydeep Chumar, and Jaydeep asks, what kind of innovation are you seeing in tax collections from citizens and also tax refunds to citizens? So I think we're just more focused on the refunds to citizens for today's conversation, but are there innovations in that space as well? I think, Walt, you mentioned, I think, tax refunds as well, I think, in your presentation. So are we seeing innovation? I'm going to broaden it out. It's the last question. What are the innovations that we are seeing in this space, whether it's on kind of tax refunds or payments in general? So this will be your final question. Aniket, I'm going to come back to you because you already mentioned AI in the future. So where do you think this is going to go? Where are the innovations we're going to see?
I think using data analytics and predictions is going to be something that I feel is going to be really powerful. If we have quality data, we can be more targeted in government programs and schemes where we might need lesser programs, better targeting, better prediction, because I think technology can now help us predict better. Now, for example, we've seen disasters globally in this year in terms of floods. Right, in India, we know by mapping that there are certain districts which have floods every year. So a simple thing like crop insurance and house insurance can be a saturation program in these districts before, and store the documents digitally, because a lot of times the problem is the insurance documents are physical and not stored. So that's just one example. But I really feel that using innovation for prediction and better targeting is kind of using this money better, and also then ensuring that people are coming back and then investing that money back in savings and etc.
Thanks, Aniket. Manita, you're nodding there. Did you want to add anything on the innovation front?
I think I agree. Satellite imagery, mobile data to target, identify those who are most in need. And then relying on geospatial mapping to also determine which payment mechanisms make sense, right? Because you can get a picture of access point coverage, getting data from the program on overall beneficiary location to make some of those decisions, can allow for more precise targeting and efficient implementation.
Thanks, Manita. So new technologies coming in, as Aniket and you were saying, to expand this. Well, you said there are still things to be done. There are still improvements to be made. What would you say in terms of what you would hope to see innovative-wise going forward?
I think, I think the Treasury being bold and as they did with the relief payments, using the existing data to get the payments out quickly. I think new technology, it was just announced yesterday that the Treasury selected JPMorgan Chase to provide account validation services up front. So agencies now will have the ability to determine if an account that they're sending a payment to is valid, and stopping fraudulent or misdirected payments. So I think things like that certainly help and promote electronic payments.
Thanks. Yeah, I think we're seeing a lot more partnership working now, aren't we, across sectors, across the public sector, the private sector as well, than we've seen maybe in the past. And Simon, final thoughts for you on innovation in the payments world?
Well, they've been pretty well covered so far, haven't they? I'd make 2 points. One is to build on Aniket's point about trust. I mean, I love the fact that he's got an ambition to make 1 billion people delighted. That seems to me like the best job description I've heard for a long time, actually. But he made a really important point about trust. Trust in government has been going down everywhere, more or less everywhere, for 3 or 4 decades now. And, there are a number of things to avoid in this area in terms of intrusive Big Brother type of behaviors with these new technologies. But there are also a number of hugely positive things to potentially build on to build trust. As Aniket said, starting to treat people more like customers, starting to give them, as Manita said, many more choices, allow them to use the channels and tools they want to, opens up the possibility that people will start to feel more trusting of their governments. And that's hugely important, because when trust falls below a certain point, we see disastrous consequences right across government and right across civil society. So I think this is a seriously important program to work on and to build and to innovate in. The other final innovation point I'd make is, to start to see this join up with other government programs. I mean, again, we've been talking about this for an awful long time. But if you imagine, for example, to give a kind of small example, you had a sustainability strategy, a net zero target, and you have a whole set of payments running backwards and forwards between citizens and the local and the national government, which allow you to go way beyond things like congestion charging or differential parking pricing or multi-occupancy vehicles or incentives for transit. And then using the data that we have available now to know more or less immediately whether your interventions are actually having the effect that you wanted them to have, because these are urgent programs and we can't afford to keep getting this wrong for another decade or two on some of these things, both on trust and on sustainability. So I think there's a lot of potential innovation this year.
Thanks, Simon. So I think that's quite a positive, nice note to end on. Actually, these payment systems could be part of that building trust between individuals and the government, between small businesses and the government as well. And I think going back to the particular point in the question that was asked, if these systems could help to make sure that tax refunds were made quickly to people, that would go a long way, I think, to making people happy and building trust as well. Well, we have come to the end. We have run out of time. It's gone very quickly. It's been a brilliant conversation. Thank you to the wonderful audience for sending in so many great questions. Thank you in particular to Walt, to Simon, to Manita, and to Aniket for giving us so much of your time and expertise today. Thank you again to MasterCard for being our knowledge partner today. I think we will have sent, if you're the audience, we've probably sent out a questionnaire to you. If you don't mind taking a couple of minutes just to fill that in, it means we can make sure we give you exactly the type of webinars that are most useful for you. You can also see on our screens, if you enjoyed this one, in particular those issues about data that were raised there. There's information about another webinar that we are running on real-time data improving government delivery on the 28th of November. And on the Global Government Forum website, you can find information about all of the webinars that we run as well. We will also send everyone who registered and everyone who attended today in a short while a link with the video from today, so you can watch it all again or share it with your colleagues. And there will be a write-up of the conversation today, a report of the key points that were made and the key discussion points that will be shared with everybody too. But for now, thank you from me. Thank you to our wonderful panel. Enjoy the rest of the day wherever you are, and I hope to see you again very soon. Thanks, everyone. Bye.